Okay there guys, I think we should get a move on and we shall first start when the guys could actually join us anytime, so no problems. We'll do that. Just give me a second. I'm just gonna right, put up my PPT right here, my PowerPoint presentation, and it's just to wait for you guys here the risk warning there. So okay, just would like to thank you guys for joining today's live geometric trading market outlook. It happens every Mondays and Thursdays, okay, so at 3 p.m. Cyprus time, which is 9 o'clock Malaysian time. Okay, and we are doing this to share trade ideas from a geometric patterns perspective. Okay, so just before we start now, I'll just go over with you on the risk warning very quickly. So Forex and CFDs are leveraged products, as you can see here, and involve a high level of risk and can result in the loss of all your invested capital. So therefore, Forex and CFDs may not be suitable for all investors. You should not risk more than you are prepared to lose. Okay, before deciding to trade, please ensure you understand the risks involved and take into account your level of experience. Seek independent advice if necessary. So that's it. That's a risk warning for you guys. Okay, take responsibility in understanding that, and we shall then get a move on. Okay, so here we go. I'll just start off very quickly with the USD JPY first. I want to share a couple of things with you on USD JPY. I know there's a lot of questions, quite a number of traders, investors as well, are just wondering about where does the dollar yen, where is the dollar yen taking us to, to the downside, to the upside, a bit confusing, but I'm showing you right now on the weekly chart. I want to straight away start with a huge time frame, but not to scare you off, but to give you an idea of the big picture, because if you look into bigger time frame, you get an idea of a bigger picture as opposed to a smaller time frame. Okay, now here I just want to share with you, we've got something that we call a cup and handle pattern, okay, going on in the USD JPY. All right, but here, for example, there's a bit of a confusion. There's quite a number of people looking at the cup and handle pattern, but they may be looking into it perhaps in the wrong view of how, a wrong view meaning not big enough a picture, so they may get the wrong direction perspective. Okay, for those who are trading the cup and handle pattern, you can always look it up and type cup and handle pattern on Google, and you can look at how it looks like. Okay, you've got I'll just draw very quickly for you here. We have got two types of cup and handle pattern. The normal cup that goes like this, okay, this is called the bearish type. Okay, this is just the cup right there. This area here is a cup, right? And then you've got a handle. Yeah. Now, usually there's got the what do you call that? The mouth of the cup here. Now, this is called a bullish type cup and handle pattern. A bullish type. What it means is that when it breaks, when it goes and reach around the mouth area of the cup, it starts to make this reversal pullback here, and this reversal usually it's around 50% of this length, this bottom of the cup, okay, and that. Now, what usually happens is that once it reaches and come down to 50%, now this is not the cup I'm showing you. Actually, this is an upside down cup, but I'm talking about the normal cup and handle first. This is called a bullish cup handle. What would usually happen is it goes up there, like I've mentioned, come down here, and then make another up through this mouth area, go up, maybe come back down a little bit, and then boom, it starts shooting upwards. And that upward move usually is similar in length with the top of the cup to the bottom of the cup. So there you go, something like this. It could go up as high as that. Okay, so that is how a bullish cup and handle would look like. Now here we have got, when we see it like this, USD JPY on a weekly chart, okay, we have got a cup and handle, but this is a total opposite cup and handle pattern, total opposite. Okay, we've got it close to 50%, I guess. Let me just try. You can always pull your Fibonacci from the top there to this lower area here, okay, the mouth area here, and look at how far it has actually gone past 50%. Usually the handle would stop like this at 50%, but this has gone past 50%. So quite a number of traders would actually look into this one here. Now, this upside down, you see the normal handle, cup and handle pattern, it is giving you a rise up. But this one here is giving you a rise down, a fall of price, meaning that first of all, it's not at 50%, so that's not a very clear upside down cup pattern, cup and handle. Okay, and the other thing as well is this is not really seen in the bigger picture. I'll show you the bigger picture in a while, and then you'll get what I mean. Okay, now if at all this hits at the 50% of this area here to this area here, you pull your Fibonacci down there, and this one hits 50%, let's say for example, then you would get an upside down handle which actually goes like this, comes here. This is the mouth of the cup. It will be total opposite of what I've shown you earlier on, and then it goes up, comes down, and then hits the area again like a correction, and then it will go all the way down, and that down area would be the same length, roughly approximately as this length here. So a big fall would be expected. So those of you guys who are familiar with cup and handle pattern, I'm just telling you, maybe you guys are not familiar, but I'm just looking at areas in patterns perspective that some of the guys or some of the traders may be looking at this pattern and they're expecting a huge fall. Okay, and they're looking at this perspective. Now I'll tell you how I look at it in my perspective. Okay, what we do usually is we try to evaluate it from a bigger perspective by simply zooming like this. When you zoom out, let's say totally, you need to pay more attention to not only the bigger time frame, but also the biggest pattern in that big time frame. That is the most important thing. Now here, very simply, what I see is a possible cup handle pattern, but a bullish one. You see, now it's gone here. Now it stopped here already. This handle has stopped here, which meets that criteria of 50% Fibonacci level. Okay, I'll just show you. If you take your Fibonacci all the way from the top, the mouth area of the cup, and you go down here, you can see that that hits at 50% very, very closely, almost accurately. Okay, so that is a sign that this could be more a bullish cup handle pattern as opposed to a bearish cup and handle pattern. Okay, so what does this tell us is that first we need to know that the base of the cup is here. Okay, that mouth of the cup area is here. All right, I'll just very roughly, you don't need to be accurate at this stage. Okay, so that is the mouth of the cup area. So what would roughly happen? We're talking about the weekly time frame, just so that we get an idea of the longest term of what could potentially happen. Okay, so if I'm giving you an idea of what could potentially happen, let's say in USD JPY on a weekly chart, some big moves to the upside I'm talking about may or potentially could happen, then you are looking at a lot of bearishness in the lower time frame, because you need to correct itself before it reaches to that level, correct? Because we're talking about the weekly chart. So here what we can then see is a possible of it coming up, right? And then bounce down a little bit and then move all the way up. And that upward move from this mouth of the cup area would be similar in length, okay, or height as this area here, the mouth of the cup and the bottom of the cup. So that would be equal in length. So if we're looking at, let's say, an example, you can always use a crosshair here and grab it from that at very top, come downwards. Approximately, okay, we've got thousands of pips here, I think, if I'm not mistaken. So that's a long way. But again, we're talking about the weekly chart. This weekly chart may last from, you know, a couple of weeks to a couple of months, okay, and months could be a range from 3 to 6 months even. So it is very possible to see that number of pips in that time range, okay? But we are talking about trading in stages. How do we do that? We look into lower time frame, and like I've mentioned earlier on, we've got just a possibility of these things going on to the upside, right? But it's not going to be a straight line up. It's going to zigzag, okay? It's going to zigzag. So it may even fall a lot and then zigzag again. So it's going to be a long way, okay, for it to do a lot of moves, okay, based on this USD/JPY weekly chart at least. Okay, so here if I clear that off, trading in stages means that, okay, we've got an upward move to the long term. So when we go back to shorter time frame, you're looking at correction, correction, correction. You're looking at downwards little moves to the downside first as corrections or corrective move to the upside. So the upside move is a long way to come. So in that big move, in that huge move, you would need to see corrective moves and all that to make that big move upwards. Okay, hope that's clear. So if I erase that now and go back, now we're rewinding and try to look at whether or not we're looking at any correction to the downside or not. Okay, so here we have got on the daily chart a little possibility to the downside because of a Z-like pattern like this. So we start off, this is again a daily chart. Okay, so we'll go into lower time frame in a bit. So we've got A, B, okay, C and D. So this is how I marry the big picture, big pattern with a lower time frame than the bigger time frame, so that we can see the whole picture. Okay, so here we've got a Z-like pattern as I have drawn here. Okay, that's a Z pattern. Now it's progressing downwards from C to D. Okay, it is showing signs and sentiments to the bearish side of things. As you can see, it's reaching this way down. So this is the daily chart. Prices are price is at 112.11. Okay, so it has gone lower than the 20.20 side number, so it is giving lots of bearishness from the candle itself, but there's a bit of an uncertainty mode because it is trading in between the three lines. But from the candle's perspective, we're looking at a lot of bearishness, a lot of bearish move. We can see how most of the candles that are dominant here are bearish candles, and they are longer and they're stronger as well in terms of their bearishness. So here it is giving you signs to the downside. Now a Z-like pattern, when it reaches the D, it's expected to come down here, it plays around a little bit and then goes up, because this is a bearish type pattern. A bearish Z pattern goes like this. This is A, yeah, this is B, that is C, and this is D. We are trading from C to D to the downside, but usually at this level here, it bounces upwards again. That bounce is usually about 50% Fibonacci retracement ratio of B to C. So you need to pull your Fibonacci from B up to C and look for 50% as an area that it could actually reach and bounce off, or in other words, your target area or potential reversal zone, or for traders, their take profit areas and all that would be within that zone. But of course, they've got to apply principles of psychological numbers and various other methods to find your personal or correct exit and entries. Okay, so let me just now use Fibonacci a little bit on this Z-like pattern. This is a bullish Z-like pattern signaling the downward move from C to D. So yes, you may have some more room, but it's a little bit risky as well. It's in between all three lines here. So I'll erase this. We'll leave it there. And now let me pull the Fibonacci and look at where roughly prices could start bouncing off, or a potential reversal zone. That potential reversal zone would be at 50%, like I've mentioned. You pull your B right up to C and you start marking that 50% area. Okay, it's right there, that bottom line here. That's your, let me just mark that for you. Okay, so you got that bottom line area here. That has marked the 50% Fibonacci of B, okay, of B to C, right? So we are trading to the downside here. So it's expected to come like that and bounce off upwards. That upward bounce usually a place where it would reverse again. It would be 50% Fibonacci, but it would most probably be, it is 50% of C to D this time. So your D is here. Okay, D is anywhere within this zone, and you can find a sort of reversal. So as of now, prices are at the 112.4 0.16 area. Okay, so to the upside a little bit of this number itself, it's the 20 side number. Okay, to the downside you have got the 00 number. Okay, so this is where we're looking at prices. If at all it starts to bounce up, then you want to know whether or not it's got more room to the upside, or the bullish momentum has just picked up. Then it would need to reach at least 20 and above, around 30. Okay, so here, for example, if it does go lower than 12.16, heading towards 10, heading towards 00, and then lower, then you're looking at that momentum picking up to the downside. So that's why it's important for us to always notice and be aware of all these psychological levels. Okay, so the psychological numbers or levels resides around the last two digits of 00. Okay, just to remind you guys, 20, you've got 50, and you've got 80. Okay, they're not in particular order, but you just need to look at the price. Like this one here, after the decimal, you've got something without the decimal at the very end. I mean, like euro and all that, 1 point something 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 something, 4 decimal places. You look at the last two digits of the price. Okay, and look at which, you need to ask yourself first question of the price, in relation to the price, which psychological level or numbers or number would it be closest to. Okay, then you need to base on that number, and make sure you tweak your stop loss, take profit, you know, and all that based on these psychological number. Also to know whether or not it's got more room to come down. If it does come down more in terms of the price, it would come lower than the psychological number, then it gives you more bearish momentum. If it's higher than the psychological number, 5 to 10 pips higher, and it keeps going up, then you've got more bullish momentum. So that's how you measure the participation of whether a buy or a sell by all these investors and bigger players in the market, based on this psychological numbers. Okay, so this is very important. So USD JPY on the daily chart, this is what's going on. There's that like pattern there, as opposed to a huge what you call that cup and handle, bullish cup and handle pattern on the weekly chart. So the weekly chart giving you room to the upside, but again, it's got it needs a lot of correction to the downside to make up that pattern, or to make that pattern succeed. So now we're looking at more bearish momentum here. So then we're looking at a daily chart, some more room potentially to come down, because the PRZ is at this yellow zone. The PRZ could be seen as your potential take profit area, also where price would reverse. That's why it's called the potential or probable reversal zone. That's what PRZ stands for. Okay, all right, let's just move on to the lower time frame for USD JPY. I just want to cover a little bit more on USD JPY on different time frames, because this is something that could be a base for you to understand the movement on the, not only for US dollar, but also gold and US dollar versus the other currencies. So it's also good for us if you can, and you are on the platform, Blackwell Global's platform, or the MT4, you just want to look into the dollar index. Okay, the dollar index is basically something that could help you understand dollar's movement. Okay, we don't at the moment have that instrument. It's not a tradable instrument, the USD index. It's to compare the US dollar against 6 other currencies. Okay, so that would give you an idea of the dollar's strength versus all these other currencies. So daily chart, that is where we were, and now we are on the 4-hour chart. Okay, so here let's always zoom out first, give us a bit of a better picture. Now here we still see that Z-like pattern there, as well as prices, as you can see, under all 3 moving averages. So that itself here, let's say you're looking at an angle like that, and that angle is close to the 5 o'clock, probably away from 4 o'clock. It's coming downwards as well. The smaller areas here is just building up on more downward momentum here. Also under all three lines, so more room to the downside. It's quite clear at this stage here, USD JPY is looking like it's bouncing off. The reason why I said it's clear as well, you need to practice using the three lines as your indicator to look at bounces off, and I'll tell you what I mean by bounces off the price. Okay, so here, for example, that downward move here is not only giving you lots of lower highs, okay, lower highs, some lower lows as well, but you have got prices bouncing off. When prices comes down, bounce off any one of the moving average, that's a good C point there, that's a good A point there, for example, and then B, then you are predicting a downward move like that for the USD JPY. Okay, so this is a very good hint in actually looking at more bounces off price. When it bounces off like this, even for the lower one here, come down, bounce off like that. That one comes down, bounce off like that, bounce off from either one of the moving average. This one all the way down here, for example, bounce off at the moving average. That's a good one as well, so you can consider that an ABCD too. So bouncing off from any one of the moving average, like on the dot, or bouncing off from all major lines like this, whether it's a 50, 100 or 200 exponential moving average, is a good sign. Okay, it usually gives you sort of a wall, you know, for it to not go up a bit more. It's just preventing it, like sealing its movements, okay, or restricting its movements to the upside. Like this one, it's just down and it get restricted with one of the walls made by either one of the moving averages. So that goes down, and then again it meets the wall there. So when you've got that wall, then you've got extra sort of restriction to move upwards, and it sort of strengthens the resistant area. Whether it's a support, it's the same thing. If you've got coming down here and then it found support in either one, that's a strong support as well. When you've got support or resistance bouncing off or from the exponential moving average, it's a good sign to use that point. Okay, because like here, for example, they got more room to come down here. It went up, it got bounced off the moving average again, the exponential moving average, so we've got more room downward. So this is what we are looking at in terms of price. Live 112.10. Now the price, as you can see, more dominant move by the bear, so it's quite bearish, as you can see. It's building up in the momentum. Okay, so that's 4 hours. So we've got, in summary, more to the downside. We've moved from daily to 4 hourly, and we can see that we've got a Z-like pattern. The C to D is moving very nicely to the downside, and then we've got all these mini ABCDs as well here. So you can always draw the centroid and then look at that as your trading area to participate in the trade. Okay, to the downside if it's a bearish ABCD, to the upside if it's the bullish ABCD. Okay, so 1 hour chart. What's going on with the 1 hour chart on the USD JPY? Now here is the same thing. It's a really clear. It's really nice as well to see all these bounces off. Okay, I'll just remind you again so I can draw this so you guys won't forget. You got price coming down, up. That bounce off is bouncing off from either one of the exponential moving average. Always a good sign. That one coming down, bounced off again on this moving average, and then you've got more here as well, bouncing off, and then it comes down and then bouncing off again, bouncing off again, bouncing off again. Here you've got bounce off here. So you've got loads of bounce off from the moving averages and pointing downwards. So you've got lots of ABCD coming down too. If you've got that bounce off, that makes a very nice C point. The C point becomes stronger because you've got that wall to prevent prices going upwards more. So that's a good sign. Hence the reason you're seeing more momentum coming downwards with longish bearish candles to the downside. Okay, so lots of trading to the downside, sort of selling type opportunity now. Even from the daily chart right down to the 1 hour chart. Okay, so for the USD JPY. Now here I'll just erase all drawings here. I'll zoom out a little bit. As you can see, the angle itself is just proving to be more, stronger and stronger to the downside as well here. Okay, Now we'll just, okay, there you go. Now if we go lower time frames, 30 minutes now, you could see prices just away from the moving averages here. It bounced off again. Even on this one here on the 30 minutes chart, it's still the same story all the way from 4-hour and below. It's just giving you lots of bounce off the moving averages heading downwards. So you've got quite strong bearish type momentum for the USD JPY. Now let's go on to the 5 minutes chart. Let's see anything as of now is in the closest term. As you can see, you just got loads of movement to the downside. So you still have got lots of room. Just looking at the candles as well, movement to the downside. It is trying to go under that 10, and then now it's approaching the 112.00. So we would need to then look at that price there, the 00 psychological level, 112.00. So it needs to come lower or go lower than that 00 at least by 10 pips. So that would give you 109, I think. Okay, point. There we go, lower. Okay, lower than that 00. So you are looking at no, I think I've got that wrong. 111, sorry, 90. Yeah, 1199. So you should go lower than 00, approaching 119, 11111.90. That will give you more room. As you can see, it just bounced off now. You see, because it's just too close to the 00. So it's giving us room, a bit of correction now to the upside. So this would demonstrate to you in the live environment right here. Let me just erase that drawing. We'll go and zoom out a little bit. Okay, so you can see that bounce off. Where did it actually happen? I mean, prices came downwards and then it stopped. Okay, you got the body right there. Okay, and then you've got the wick right there. The wick stopped at 111.98. That is just about 2 pips away. Okay, of 112.00. Then this one here, that body price 112 again, 03 is just 3 pips away from the 00, 4 pips away from the 00. So just before it reaches 00 side number, okay, 112.00, as I've just mentioned earlier on, it bounced upwards. So if you are looking into taking that trade to the downside, for example, then you want to always, you're selling anywhere here, let's say, but then you've got a target area around here, so it's closest to the 112.00. Okay, so what would be best is to always, if you're on the downside, trading to the downside like that, then you want to always escape before the 112.00, at least by 10 pips. So that 10 pips above would give you 112.10 as your ideal area to escape or take profit before it reaches that 112.00. So this is demonstrated very nicely, very clearly here, realistically as well, on this live market environment for USD JPY, just based on the psychological number. Because what usually traders do is they get overconfident and they just think or feel instinctively that prices may drop. So without applying the psychological levels here, they would just leave this market to fall, and then it doesn't fall, they'll just tell themselves, okay, maybe it'll start falling later and stuff like that. Now that wouldn't be a method that would measure your risk well, or become more risk averse. Okay, it's no harm for you to exit before the side number, re-enter again once prices go under the 111.80 and below, because we are applying the principles of psychological numbers. Okay, we've got loads more of tutorials and all that in the FX Geometry website, as well as coming soon. We've just seen some work done on it, so it's quite close to finishing. It's just that we've got tools that we have, really cool tools that we will apply there to help you understand, to analyze the market, like market heat map, and to know the trend and all that. So at least you've got one place hub to understand the market sentiments and make the decisions of the trend direction before you place your trades and look for patterns as well. Okay, all right, there you go. USD JPY, we've reached the 5 minutes. We've traveled from the weekly right up to the 5 minutes chart. Okay, you can always go back to the 1 hour chart, look into what's going on, but at least you've got an idea now that there are areas here that it may find support as well. Okay, it's just stuck at this area now. As you can see, the wicks is stuck at this area. We have got some on the 1 hour chart. You could always draw that area there, as well as based on this candle here. Okay, so we've got this three area that is really significant, showing us some potential support area here, especially with this two. So as you can see, based on psychological numbers, well, it need to go under 112.00. Only then it gives you more momentum to the upside. Now, once it goes 112.30 and above, like above this line, then it's got more momentum to the upside. But if it does go upwards, it's based on a 1 hour chart now, then you've got challenges here as your resistance, here as your resistance, because these are where your three moving averages, exponential moving averages, the 50, okay, the 100 and 200 here. So prices go up, might find an again resistance and then come back down again. So now prices is actually trapped at this area here. We need the prices to go above or under that zone between 112.30 to 112.00 area. Okay, so it needs to come under that zone or go above it to give us a little bit of a breakout of that zone. If not, it's just trapped in there. If not, it's very difficult for us to make a decision on the USD JPY's direction. Okay, all right, there you go. So we've got a bit of a better coverage. Hopefully it's giving you a bit of a better idea on the directions of the USD JPY. Okay, and as of now, to summarize, more to the downside here from short to medium sort of term, but then the longish term between 3 to 6 months, we may see a bit of a potential to the upside. Okay, but we want to trade in stages, meaning we want to look at our equity, match that equity with the time frame that we are supposedly needing to look at. Okay, not look at huge time frames and based on that when we've got lower equity. Okay, so this is needs to be a very careful measure of how you should be choosing your time frames with your trading. Okay, so USD JPY. Another hint as well is that we've got some bank reports. I've done a bit of a research, and apparently in about a week and a half or so, we might hear Trump, calling names again, China, calling them currency manipulators, or any other countries. The moment we get the news coming from big names like Trump, especially, or any other people, but mostly it's Trump at this moment of time, calling China as the currency manipulators. If he does do that, I mean, research as well has shown that every time he does do that, then you are looking at the potential USD falling downwards. So the sentiments of the USD usually falls down or bearish and heading to the downside when we have got news about currency manipulators. Okay, when Trump especially calls China, usually it is the USD versus the CNY. Okay, so this is where we are usually looking a bit of a downside there. Okay, because they are trading partners as well, so they always have got consequences when one is calling one names, but then each one of them rely on each other on a large scale as well. Okay, so CNY is your onshore kind currency for China. Then you've got CNH as well, because there's a lot on news. CNH, okay, that's your offshore Chinese currency, renminbi. Okay, that's a offshore type, and that's the onshore type on the mainland. Okay, two types of currencies, two types of currency denomination that China has: the onshore one, the offshore ones. Okay, all right, there we go. We'll erase that. Now let's just have a quick peek on gold. Now gold, naturally, it's giving a lot of shine at the moment to the upside. Okay, here very clearly it's giving us loads of bullish momentum. We've got a lot of higher lows, but most important, importantly, you've got all these three lines for the moving averages showing lots of signs to the upside. Look at the way it moves as well. Like I've mentioned earlier on, you have got a lot of bounces as well, a lot of support bounces from the any one of the moving averages or all three also. So that's giving a lot of room to the upside. So upside bullish momentum, you may be looking at, you may look at ABCD, bullish ABCD pattern. So we've got some questions here. All right. Hi there, Kirti. How are you doing? Not yeah, some you've missed some, but we've got it recorded, so I will be happy to post that, okay, for you onto the chat in Telegram, so you'll be able to watch the recording. Okay, don't worry. We are at the moment currently looking at the gold. I suppose I mean we've gone through USD JPY, so now we're looking into gold. Gold is giving rise to the upside. At the moment, let's look at a little bit price action. 1228. Let's just look at this price 1228 itself. 1228. I mean, if it reaches a little bit higher to 1230, okay, giving you more rise to the upside. Of course, now itself it's building up its momentum to the upside. Let's look at behavior of the candles. Behavior of the candle itself. Look at the correction. Correction is really short to the downside. Not many bearish candles, again getting weaker and weaker to the downside, less and less long bearish candles, but longer bullish candles and very steep and pointing to the sky. So that is giving us a lot of bullish momentum to the upside. Okay, so now let's say we're looking at the upside here. Okay, whenever we're looking at, let's say now, for example, gold to the upside. Now, gold to the upside, we need to always look left. We need to look left and look at previous movement, whether or not close to where prices are now, did gold come down at this level? Did gold ever come down and cause a bit of a bearish fall at this level here? Okay, so we use price action. What we do then is erase all that drawing, we zoom, we go onto the 4-hour chart, okay, and we zoom out and we see, yes, it has actually started falling here. So that is a very significant area there, you see. So here we have got that movement, price played around and then boom, came down here. So that is quite a significant move here to the downside. Of course, price is coming up now, but always we think and we view a risk element. Okay, what is the risk of it coming down? The risk of it coming down anytime soon would be based on that previous resistance level here on the left. Okay, this is the most obvious that we can see. Once we zoom out, that's why, hence the reason zooming out gives you a bigger picture. So let's just erase that one, and now we zoom in a little bit to this area here. Okay, so let's say we put this here. Right, let's zoom in. Now that's the area that we're talking about. Okay, so here you have got prices, you know, thinking on the sideway, you know, a lot of uncertainty, but then the bears or the sellers taken over and pull prices all the way down. Okay, and that's a significant move to the downside. So here what we do is we look for the highest body. Okay, so we've got the body right there. Okay, where the selling has actually occurred. We didn't actually have you know, very long wicks or so, so we just take that body as an example right there. So we have got the this area now marked. Okay, so prices need to take over that previous sellers, because here we had previously in the past a big fall to the downside and it got powerful sellers. Okay, powerful sellers. This is the hub for the powerful sellers. Now the buyers need to be powerful only if they have taken over the camp. This is the camp by the sellers. It needs to go cross above 1 2 3 2 1 2 3 2 point. We can always use this as well, the last 2 digits psychological level. So that 0.24 to the downside is closest to 20. So it needs to go above 20 by at least 10. Okay, so $10. So 0.10 cents. So 30. Okay, so we need to wait till prices go above and above, go past this line, reach 1230 and go above, then we've got a bullish momentum. If not, it might actually find resistance here, because resistance can become resistant, of course, but it can also become support. So support can become resistant. But when does this support become resistant? Only if it crosses this area of 1232.24 above to 1232.30 area and above, then we have got an upward momentum for the gold. So that's probably what it's waiting for. Okay, so here we have got okay, no questions so far. All right, just erase that first. Okay, so that hopefully gives you an idea. So we've got the upside on the 4-hour chart. We've got strong upside based on the 3 moving averages as well, the way the candles are moving, the steepness of it, the correction to the downside is getting less and less, but then the upward momentum is getting more and more. It's stronger. Now we just have to look at price action and wait till prices cross above and pierces through the 1232.24 area. Okay, now let's look at what's going on with the daily chart. Now daily chart, it's uncertainty. Okay, it's got prices, gold prices are actually in between all 3 moving averages. It's not really a very clear indicative sign of a bullish or bearish momentum. It's just waiting time. Would it find some resistance or not? We don't know that yet. Okay, we just need to wait and look at whether prices could go above. Once it does go above that yellow line, it would then most probably be above the 3 lines altogether as well. So that's a good sign. Okay, so here we've got some support here though, but it's not safe at this moment of time to do anything as in looking for patterns or anything else, because you've got the least clarity. When you've got prices of any instrument in between the 3 lines, we just leave that time frame alone. Okay, we just don't look into it as yet, because most probably you'll find that uncertainty as well in other higher time frame than that. Okay, so we just, you see, move away from all this daily, weekly, monthly, go lower. Okay, where you find clearer picture, where you've got nice bounces off from the moving averages, the clearer it is, the better for you to consider that particular time frame. On the 1 hour, it's looking quite nice. Here you've got a possible potential A to B, C to D move right there. You've got a little bit more move to the upside, pointing at this area here, 1234.52. Okay, so that's another area here. So we've got AB equals CD right there on the 1 hour chart. Okay, so again, it's too close to that area, and you look at how prices is just playing about. You know, it's weakening in its body as well. Okay, so if we go to 15 minutes chart, let's look at what's going on. Still, it's mirroring the same thing. So at this stage for gold, it's probably best for us to watch out for that level there and gain, look at it gaining momentum much more once it has crossed over from 1232.24 and above and above. Okay, at this stage, the lower time frames to sort of the medium, giving us hint to the upside. Okay, if we go this way, the angle as well is fairly towards the 1 o'clock. The 2 o'clock would be around here, but then it's above the 2 o'clock, giving us some potential hint saying that gold might be to the upside. But again, we use price action to determine that properly. Okay, so let's look at what's going on with the GBP USD. Before that, let's look into the euro. Okay, I want to speak a little bit about the euro. Now, just for you guys who are not aware of what's going on in the Eurozone, there's just a lot of mess politically. Okay, politically a lot of mess, a lot of banking sort of crisis, a lot of business crisis going on in Europe, the European countries, predominantly the ones that are mentioned the most in the news as well. But we are also talking about some political events, especially elections, France, Italy, Holland, a couple of places, all at almost the same time. So what I've noticed as well in top movers, we are looking at more downside pressure. Lots of investors from the 4 hours right up to the weekly chart on the top movers on action forex.com is looking at the downside move or bearish for the euro versus the other currency. So that is signaling to us that we've got investors paying attention to the downside, and these are the euro pairs, especially euro USD. It's always within one out of 5 top movement currencies to the downside based on the top movers in actionforex.com. Okay, so here we have got 2 patterns here. On the 1 hour chart, likewise on the 4 hour chart, but I'll just use the 1 hour chart to make it clear and neutral for you. Okay, so here what I have 2 patterns. We've got the red Z-like pattern, which is a bullish pattern. Okay, that is marked in red, and it's got its red zone where it might bounce off. So I'm looking at the Z pattern here would reach inside here and start bouncing off. Now prices is at 1.0716. 1.0716 is really close to the 1.0720 side number. So I would then, if at all I have taken this trade to the downside, okay, I would enter earlier, of course, around there, but would suddenly exit at 1.0730 area. Why? Because it's based on a psychological level of 1.0720. Before price reaches the 20, 10 pips above the 20 is 30. So you would then escape at the 30 area. So I wouldn't be still in the trade even though it's actually in that zone. Okay, so A is right here for the Z-like pattern. A, B, okay, C and D is right down there, as you can see. There, that's your C to D leg. Okay, so when we trade the ABCD pattern, that's C to D to the downside that we're trading, and then D to E to the upside as well, if at all you fancy trading that leg. So you've got A here. Okay, let me just A, B, C and D. So here we've got a risk of seeing prices going up very soon. If it does go upwards, it may go up to at least 50% as your target area Fibonacci of C to D. So you pull your Fibonacci retracement from C to D, you mark the 50%. This is based on this pattern here. Okay, Z pattern. So the Z pattern right there, it's a bullish pattern. So A, B, C, D like that goes to about 50%, and then you're looking at upward move. So very soon, as you can see, pattern just it's looking great at the moment, the pattern, the ABCD of the bearish, the bullish Z like pattern here. So it's expected to make a bounce at this area here, because this line here at 1.0706, it is exactly what do you call that? At the 50% of C to D. So that is from the Z pattern that you're trading. Now, secondly, for the Euro USD 1 hour chart, we have also looked into, let's see, the second pattern. As it was falling, we have got a second ABCD pattern marked in yellow, and the yellow pattern ABCD is a bearish ABCD pattern targeting at a potential reversal zone as well as take profit zone at this area here, which is 1.0686 area right down to the 1.0656 area. So you've got 2 choices of trading. If you are at all trading with the ABCD pattern to the downside, you are targeting that yellow area, but it's based, your trading area entry would actually be based on the centroid area here. That centroid area is marked at 1.0756. So if at all, let's say, before all these moves happen, if I were to enter based on the principles of psychological numbers, then I would first look into where the centroid is. The centroid marked at 1.0756. Okay, so 56, and I'm selling, and I want to sell to the downside. So 50 is the side number. So I wouldn't then touch that number there. If I were to sell to the downside, I need to sell only if it's lower than that 50 area. So 10 pips below would be 40. So ideally, my entry area would be 1.0740. Okay, so that would be my area, and I would still be in profit at this moment of time, but I may exit right there before 1.0706 as well. Why? Because I've got that pattern telling me that it might bounce off more. So I would take my profit and I would re-enter later on once it goes under 1.07.06. So under 1.0700 site number and below, start trading and take profit around that area here, because this is where the ABCD is marked. Okay, so here with these two patterns that you see, the Z-like pattern almost finishing now, ABCD pattern in yellow still actually progressing, we have a significantly sized M-like pattern as well, okay, which does actually again mark the upside move from the yellow zone. So the red zone marks an upward move, a bounce off correction from the red zone as well, upward move, and the same goes for the yellow zone as well. Prices does move downwards here, make a bit of a what do you call thinking sort of mode, and then upward. Okay, that's basically it on the Euro USD. A couple of other pairs as well, just to share with you. Now I think I've got some questions here, so I shall then raise a drawing here. Give me a second. Okay, let's see. Hi there, Niti. Niti says, I entered at 0.440 and take profit 0.7. Okay, yes, that is correct. Yeah, if you're looking at the short term based on principles of psychological numbers, you are right, because 0.740 is ideally a good, better selling price because it is under 10 pips of the 0.750 site number, and then you are aiming downwards. So the aiming downwards, 0.700 area is another site number, so you want to take profit before it reaches 0.700, so 0.710. Yes, ideally that is correct, Niti. Yeah, that's a good one. Okay, so that's your short-term sort of thing. So we have got literally, and this trade alone to the downside, we have got three possible patterns. First one, Z-like pattern, trading C to D downwards. Then you got the ABCD on its own, trading the C to D to the downside as well. And then you combine all these one, you've got an M-like pattern also trading the C to D to the downside, aiming at that yellow zone area as your potential reversal zone or your take profit zone. Okay, so that's basically it. Now we've got that. And with Australian dollar, just before Australian dollar, perhaps we want to look a little bit on the GBP, because we've got quite a number of moves earlier today morning, my time in the morning, 9-ish or so in the morning. That'll be about 3+ afternoon in Malaysia. We did look into the top movers in Action Forex and looked at loads of participation of investors into the GBP oriented. Of course, we looked into heat maps and found that it's more to the downside. The sentiments are to the downside for the GBP, especially GBP versus the dollar. Okay, so we're looking at that and found that we've got a pattern here, a Z-like pattern here that would coincide or sync in with the movement to the downside from C to D here. Okay, so you've got A here, B, C, and D, and we are still aiming at the C to D to the downside. So let us just get rid of this. Okay, so here we are looking at more room to the downside here, and then making the bounce off to the upside, because this is a bullish Z-like pattern here. So yes, for now, downwards move 1.2447, very close to the 2450 area. So we need prices to go under the 1.2450 area towards the 1.2440 area and below to look at more room to the upside. But we are really risky area here. It comes downwards, may find a bit of bounce where near that 200 moving average, as well as the end of that Z pattern here, which is the D point here. Also, it's the 50%. So if you go and pull the B to C right there, if at all it reaches downwards more, then it may aim, it's got more room to come down to the 1.23 46 area. Again, it is very close to the 1.2350 area, so it might actually bounce off at the 1.2350 area as well. Okay, to bounce off. So once it does bounce off, it bounce off to at least half of the length of C to D, 50% as well. So bounce off and there. Okay, we don't know till then what would happen as yet, but just to give you an idea, what's going on now, you've got this bearish sort of move by the pound versus the dollar. It has actually gone under this zone here, okay, and this zone here. These are resistance zone, and it has actually complied. It has actually gone lower than the zone, giving you more room to the upside. So now to the downside, you need to look to the left. Where has it gone up in the past? It has gone up here. It has actually gone up here as well. See, all the way up there. Oops, sorry, it's down here. So you've got this area, and this area is potential support as well. Always look left and look at where. If you're looking at prices coming downwards, look left and see where has it gone up close to the price that you're looking at now. Okay, this is how you look into price action. Okay, and look for more evidence in the past of where it has gone up. If you are looking at the downward price now, like now, downward price now, to the left, where has it gone up to where the price is? The price is now at 1.2550, 1.24, sorry, 1.2450 area. Has it gone up in that area? Yes, here it has gone up. Here it's gone up. So you've got a risk of bounce up to upwards move as well. So it's probably best for the exit to happen closest, I would say, as far as possible away from that potential area where you would find the risk of prices or direction going against you. Okay. All right, that is for the GBP US dollar, more on the price action side of it, and that shape there, or that pattern there, it's a Z, bullish Z pattern. Now we've covered Euro USD, USD, JPY, GBP, USD, some on gold, a little bit on CAD, JPY. We've got you know, combining what you see on a heat map, something that is strong versus something that's weak. So we're looking at weakening CAD at the moment, as you can see here, and strengthening JPY. So you combine the two, you may find some opportunities to the downside for that. As we go on to the 1 hour chart, we look into more downward pressure as the prices are under all three lines, and it's giving you hints to the downside. 4 hour chart, it's the same to the downside as well, but a little bit of a support sort of move on the daily chart, so we need to ignore that. It's not really clear what's happening there on the daily chart. It's the same going for the weekly chart as well. Prices in the middle, it's not a good not a good time frame to look into when prices does that. It's the same goes for that. So from daily onwards, perhaps we just want to leave that aside. It's no clear picture of trend, so we want to move on to lower time frame. So let's go on to the 5-minute chart right here. We've got loads of downward move here on the 5-minute chart. We've got more on the 15 as well, 30 minutes chart, and also the 1 hour chart. So you can always look into patterns as well here. Okay, you want to look at touch points and more room to the downside, like that. A, B, here probably C, and then more room to the downside. But at this stage, this may not pose so much of a interesting type move that we can see clearly. But on the Australian dollar, we can see that it's a bit of an uncertainty on the 1 hour chart. It's the same that we've seen earlier on. But AUD USD on the 4 hour, it's rising upwards. So you've got prices moving to the downside, but it is it may actually also hint a pole flag pattern that signals upward move. This is the pole, and you've got a flag movement up downwards, and it's signaling an upward type move. So if you draw a channel that based on the downward move for the flag area, then you could see that that's a possibility of how prices would then move. Okay, so then you've got price like that, like there. So it may take its time and then find its movement upwards. So that if it does break out of that, it usually comes back a little bit here before making that move. That move upwards from this point here would be the same length there. Okay, so you start off here, you measure that, so that would be similar. Okay, that's your flagpole pattern. That's a bullish flagpole pattern, potentially, but you need to wait for it to break out in that area first to the upside. It's looking like it's bullish, giving you bullish momentum in the 4-hour chart right there, and lower time frame too. Okay, that's for the AUD versus the dollar. Okay, it's not very clear on the other time frames, but the clearer ones giving you the clearer upward sort of upward possibility or trend clarity would be the time frame that you should be choosing. Okay, guys, I think I've got a few pairs to cover. We don't want to go too many pairs, but I would like to answer any questions that you may have. So if you do have any questions, feel free for me to answer them. Okay, any questions at all on pairs that you're thinking of opening or are already in trades with it? If you've got any questions, feel free before we end the session. Okay, that's basically it. So no questions at all. We're at 4:10 at the moment here in Cyprus. Okay, so in that case, since you guys have got no questions, I'll just wrap up here. I hope that's been clear for you guys and you guys have found it to be useful. Okay, Niti, that's brilliant. Got some pips, Niti. That's good to hear. That's brilliant. Okay, good. So there you go. Hope you happy pipping to you guys. Okay, hope you guys can pip up more pips. Okay, mind the puns. So got all that geared up, and if you guys have got any questions, anything to share at all, you can always meet me in the Telegram group of GTI, Geometric Trade Ideas, and we can then meet up there. If not, then see you again. Join me again live on Thursday this coming Tuesday. So this webinar will run every Mondays and Thursdays for now. So we just would like more participation. If you guys have got more timing that suggestions on timing, let me know so I can have a think about it and organize timings that would be more suitable for the majority of you traders out there. Okay, so that's it for now from me, and I would like to thank you guys for attending this webinar today. Wishing you a pleasant evening and a good day ahead tomorrow, and we shall then communicate via Telegram GTI. So see you soon. See you on Thursday. Take care now, and bye-bye.